All right, welcome back, everybody, to the Annuity Researchers podcast, where we provide unbiased reviews of annuity products so you can better understand how they work. I'm your host, Zachary Van Ness, joined by my co-host, Matt Sluizer. Now, we're both senior annuity advisors with Annuity Association. Today, we are going to take a look at the F&G Accumulator Plus annuity. And as always, I'll walk us through the brochure page by page, highlighting the key features and mechanics. Then Matt will break down the index options in greater detail.
Hey, thanks for joining, everybody. Before we get started, just a quick disclosure. This episode is for informational purposes only and does not constitute legal, tax, or financial advice. Product features, rider options, and rates vary by state and may change at the insurance carrier's discretion. The brochures that we reference today are not intellectual property of Annuity Association, and please consult with a licensed financial professional if you would like to evaluate whether this annuity may be a suitable investment for your situation, goals, and objectives.
All right. Man, Matt, it's been a minute since we've done this. It's been so long that I'm now wearing a hoodie in Florida.
I like it. Yeah, we got a little bit of cooler weather. So
yeah,
just a touch, but it's nice for here.
It's enough of an excuse for me to wear a hoodie. I'll take it. All right, so we're going to jump on into the F&G Accumulator Plus, which, as you can see here, it says 7 and 10. So what does that mean? It means that this product is available in a 7 and a 10-year term. Within the brochure, just giving some explanation regarding fixed indexed annuities as a whole. So when it comes to your hard-earned retirement savings, does the thought of letting your money ride with the ups and downs of the market give you an uneasy feeling? But you don't want to miss out on sharing some of the potential gains. A more conservative solution called a fixed index annuity might be the right fit. A fixed index annuity helps you protect from market losses and principal growth potential based on market index, something like the S&P, without the risk of actually being invested in the market. Plus, this does provide a way to protect your legacy to your heirs. So what is an annuity? I do appreciate that F&G goes through a more background of this annuity type to define what its intended purpose is for in their brochure. An annuity is a long-term retirement tool that can be a cornerstone for financial security and success. So how does it work? So in effect, what we're doing is you pay the premium. Client pays the premium to that carrier. And this would be F&G in that case, and that would be your principal. And the promise provided by the carrier, provided by F&G, is that in exchange for your premium, you receive benefits and guarantees from F&G. F&G will provide an annuity policy and promises to look after your hard-earned money. From there, you then have that policy itself. You're a financial professional. Us here at Annuity Association will help you select the policy that best meets your needs. So whether you're looking for downside protection and growth potential or guaranteed lifetime retirement income, we can find those for you. So just a quick reference on how these annuities work and how the F&G Accumulator Plus 7 and 10 works. It does come with a statement of understanding that explains the annuity in detail. So this is an important factor. That statement of understanding has product information that's important to help you understand the annuity. If you decide to complete an application, that's your formal application to move forward with that annuity, your financial professional will ask you to sign that acknowledgement to confirm you've read that statement of understanding. And if there is any conflict between the guide and the statement of understanding, that statement of understanding prevails. So we'll jump on in here. Question being, is the Accumulator Plus a good option for you? Which is hence why we're doing this review. A fixed index annuity provides potential to earned interest linked to the returns of an index. It uses a formula subject to certain limitations to credit interest on your account value based on the changes in market performance. Now, again, it does protect you from downside market risk. So the three considerations of Why this specific annuity, the Accumulator Plus? Number one, downside protection. You're guaranteed to not lose money due to market declines. Number two, interest growth potential. So from the elected index options you may choose, you can see some interest growth. Now that'll be something that Matt will review a little bit later. We'll dive in a little bit deeper. And number three, tax deferral. So to help your savings work harder, interest grows tax deferred. That way you may have more money to compound and grow. With the Accumulator Plus, some key features here: 100% downside protection, interest growth potential, automatically locks in gains at the end of the crediting period, whether that's a 1 or 2 year crediting period. The ability to add more premium. So this is what's called a flexible premium, meaning that you can add more premium at any time within that annuity. Tax deferred savings, plus access to unexpected health care expenses when you need it most. Now, one thing that we're looking at, again, fixed index annuity, we've got that downside protection. Here's an illustration of how that downside protection and growth potential work together. So to illustrate, Matt's going to take a quick minute and just run through this with us, but to illustrate the performance in both the up and down market condition, this example shows how $100,000 in this product would be allocated in 3 different ways. So using 3 different index options by diversifying, we can see in the illustration, number one, downside is protected. So we're not seeing a decline in the account value in what's being shown here, only an increase.
Yeah, and the main takeaway is how a fixed index annuity works in terms of principal protection. You know, really this would be someone that they have a goal of gaining some more productive growth potential out of their savings, but they don't want to risk taking a loss. Maybe they're coming up on retirement where if they took a big step back, they don't have a lot of time to make that up. And so with a fixed indexed annuity, you have the opportunity where you can participate on the positive performance in the markets, but your downside is protected. And this particular chart is showing an initial investment of $100,000 in 2010. And you can see that in 2024, that investment has almost doubled. And each year that the market has been positive, at least those allocated indices, you can see that that value is increasing. But the years where the market has had a loss, 2022 was the most recent example. You can see in that case, essentially the balance stays flat. So there's no loss there. It's just that 0% interest would be credited if those indices were down during the year.
Yeah, exactly. So looking at something with a more stable growth potential, and then again, that downside loss protection. Awesome. Thank you. So a little about F&G. Matt will actually show us a little bit on our software, but an A-rated carrier established in 1959. They're advertising over 1 million people protected with their policies. F&G has provided peace of mind in retirement products. Today, they provide annuities and life insurance for over 1 million people across the United States. F&G is a division of Fidelity National Financial, a Fortune 500 company. And apparently, if you want to work there, they are a top place to work in the last, couple years.
Just to add to that last page, Zach, so I know at least a lot of people that I speak with, when they see Fidelity, they think of Fidelity Investments.
Oh, good point.
So just to be clear that those companies are not related. Fidelity and Guarantee is a separate organization from Fidelity Investments.
Yeah, thank you. So some other considerations within this annuity, as we had mentioned, there's some key features here that may bring this product to mind if you are looking at fixed index annuities. We want to elaborate more on the features that one may have that others may not. So within this product, you do have access for unexpected healthcare costs. And just to elaborate more on that, you can access your total account value with no surrender charge or market value adjustment if you need home health or nursing home care, or if you're diagnosed with a terminal illness. You may access the total account value with no surrender charge or market value adjustment. The diagnosis of terminal illness must occur at least 1 year after the contract issued. In certain states, nursing home care or confinement must begin after the contract effective date. These are defined conditions and benefits, and availability may change from state to state. So a little bit unique here in some of the features we have. This is not standard necessarily across the board in fixed index annuities. You also have the ability to make withdrawals. So you may make withdrawals on your money at any given time. You will have penalty-free access to up to 10% of the total account value in years 2 through the end of the surrender period. So to clarify, year 1, we do not have access to that 10% free withdrawal. Any withdrawals over that 10% amount annually will incur a surrender charge and a market value adjustment. This does give a visual of the surrender charge schedule, depending upon if you're looking at the 10-year or the 7-year term. It does change by state in the 10-year term. However, all states carry the same surrender charge in the 7-year. A little more detail on RMDs. Again, we talk about some of these features. This is another feature to consider when you're looking at a fixed index annuity for growth. What is required minimum distribution? An RMD is the amount that qualified plan participants must begin withdrawing at age 73. So if you have a qualified plan, something like a 401k, an IRA, withdrawals do begin currently at age 73. Those RMDs are required in order to avoid penalty from the IRS and will be taxed as regular income. Now, if you need withdrawals above that penalty-free amount, so if you need withdrawals beyond 10% to satisfy the RMD, F&G will waive any surrender charges and market value adjustments. So a key consideration there. And I've mentioned market value adjustments just to clarify. What is a market value adjustment? So anytime a withdrawal occurs in a surrender charge, a market value adjustment will be applied. That market value adjustment, or MVA, is based on a formula that takes into account changes in the rate since the contract was issued. So generally, if those rates have risen, market value will decrease in that surrender value. And if they have fallen, the market value adjustment will increase in the surrender value. And that does apply to certain states. Some states it does not apply to.
Yeah, and that's an area that I think can be misunderstood, but the way that I think about it, if someone invests in a policy like this, then Fidelity and Guarantee, they're typically going to take that premium and invest it in bonds. And they're going to use the interest generated from those bonds to help to make the guarantees for this contract. And essentially, when they're making that investment, they plan for the owner to hold that policy through at least the surrender period, whether it's 7 years or 10 years. And if that owner cancels early, Fidelity and Guarantee will have to liquidate their position. And if they take a loss because of that, or if there's a surplus, they would pass that along to the owner in terms of that market value adjustment.
Yeah.
So as you mentioned, if rates are increasing, then that market value adjustment could be an additional loss that's passed along. Or if we're in a situation where interest rates are decreasing, then it could be a surplus.
Yep. Oh, perfect. Thank you. A few other key features to consider: death benefit. Your account value is paid as a lump sum death benefit to the beneficiaries whom you name in that contract. Beyond that, there are optional fees. So this annuity is available at no charge to you. However, certain index option riders may offer the potential for higher caps or higher performance with an additional cost. So we'll take a look at that more in depth with Matt. Now, you do have the option for annuitization. You don't have to worry about outliving your assets. You can turn your annuity into a scheduled payment for life on its maturity date. Maturity date of your annuity is set when it's issued. That's about it for us on the brochure. Pretty straightforward. Again, I love the fact that it gives us some explanation of fixed index annuities within the brochure, as opposed to just jumping to conclusions sometimes.
All right, so now if you've joined us before, you know that we have a software that pulls from the entire independent annuity marketplace, and we can look at some live examples as far as where is this annuity position in the marketplace, as well as really with a growth fixed indexed annuity, the index options, that's what's most important. That's the engine in the vehicle that's moving things forward. And so we can take a look and see what index options are available in that annuity, what are not only the back tested returns, but also we can take a look at live performance. How long have those indices been operating, and what has the live performance been since they've gone live? And so I'm going to share my screen. As I pull that up, just another quick disclosure, the rates that we see, I'll be taking a look at Florida as the state. Now, the rates and availability could be different by state. So if this is something that you're evaluating, please be sure to reach out to a licensed professional to see what the rates and availability are in your particular state and if this is a suitable investment for you. All right, I will go ahead and share my screen. Can you see this, Zach?
Yep, gotcha.
Perfect. So this is our performance analyzer, and what we're looking at right now, this is just sorting all of these fixed indexed annuities raw without any parameters around it. But essentially what it's doing is it's picking out the top index option for each of these annuities. Now, each one will have multiple index options, so you don't have to put all your eggs in one basket within the annuity. You could have an allocation with a few different index strategies, but this is sorting based off of the back-tested performance. And so these numbers that we're looking at on the right, this is showing the top index option for this particular American equity annuity, for example. And in the black, we can see what the back-tested performance is over the most recent 10-year period. And then down in the red is showing what is the worst 10-year stretch out of the last 20. Now, these fixed indexed annuities all have principal protection, so there's no risk of loss if the markets are negative. So even though it's shown as a red, that's still a positive figure. And then up at the top in the green is showing the best 10-year stretch of the last 20 years. And then if available, we'll have what is the most recent 15-year period and 20. And so we can put a couple different parameters in here on our search. So one, typically I like to start the review with options that can be structured with no fees. And so I have the ability here that I can select no fees, no additional riders or options on the contract. And we'll take a look at, we'll consolidate this to show the top index per annuity. And then in order to get kind of an apples to apples comparison, so one feature about this particular annuity from F&G is that it has flexible premium for life, where you can, once the contract is established, you can add to it. And where that comes into play would be someone that maybe is looking to have productive growth potential on their savings, but they're still working, they're still in the accumulation phase, and they want the ability to add to it over time, or right now the rates are very favorable on these annuities. So it could be a situation where you want to test the waters and get your foot in the door on this annuity. But also right now, because rates are favorable, if rates decline in the future and options aren't as attractive, having the opportunity where you can add to it. Those would really be two situations where that flexible premium would come into play. So I can sort for flexible premium over the life of the contract. And then the other piece is that some of these index strategies have different crediting terms. So as I have this sorted right now, this index at the top is a 2-year term, which means they'll measure the change in that index over a 2-year period. And if that index is positive, then you would participate in that upside as an interest credit. And so typically, a lot of people I work with like the opportunity to earn interest each year, where you have the interest is getting locked in under your protected principal balance, and you have the opportunity for more frequent compounding. So we actually can put in here to sort based off of the top 1-year strategies, where you have the opportunity to earn interest each year off of the positive performance of these index strategies. And so now I have all of those parameters in here: no fees, 1-year strategies, flexible premium. And we can see as far as where does this Fidelity and Guarantee Accumulator Plus stack up in the marketplace.
And
So
Matt, if I can add something real quick. So sorry to interrupt you, but just the transparency that we're sharing with you here and how we're getting to search for these, this isn't just specifically to find this product. So this is what we do as a daily practice. The idea is that we can provide you clarity and transparency around how to search for the right annuity for you. So in doing this at Annuity Association, this is a standard for us, so very simple for us to find this information and filter down what you might be looking for. This is a great example for what Matt's doing right here of how we're able to find the right annuity for our clients. Go ahead.
Yeah, that's an excellent point. At the end of the day, these products are a tool, and it's about finding the right tool for the right job. And so when we meet with clients or prospective clients, it's really custom tailored to them, because the right tool is what's the best tool for the job that you're trying to accomplish. Yep. And so we go through and we can put in those parameters based on the elements that are most important. And so based on these parameters that I've entered, there are 40 different annuities that are pulling through in the marketplace. We can see, at least from based on the index option that has the highest back-tested performance, the one that's coming out as number 1 is through Delaware Life, this retirement stages select 7. But I can scroll down and see where the Fidelity and Guarantee Accumulator Plus ranks. And so let's go. This is a different product from F&G, the Power Accumulator. It's somewhat similar, but has a different range of index options that are available. But if I go down a little bit further, we see the Accumulator Plus 10. So we talked about there's 2 different surrender periods. There's a 10-year surrender period that's available, as well as a 7. And so if I look a little bit further, here's the 7. And so these 2 products will have the same index options that are available. The difference is on this little bit of a longer surrender period, the rates are slightly higher as far as what is that participation in the index growth. But we can see that as far as the Accumulator Plus 10, it's within the top 15 on the list. So it's not at the very top in terms of how our software ranks these. And then the Accumulator Plus 7 is just outside of the top 15. But if I go in here, so we can take a look at a couple things. So we talked about Fidelity and Guarantee. They were founded in 1959, and this is showing the company ratings. And so the one that's the most widely used when talking about insurance companies is AM Best. They're the oldest insurance company credit rating organization. And their rating system, if it's a B plus, B plus plus is considered good, A minus or A is considered excellent, and A plus or A plus plus is superior or the top tier of the excellent rated companies. And so this rating is really to show what is the financial strength of these companies and their ability to meet obligations to their policyholders under normal conditions. And there's a few additional rating organizations. There's Fitch that has F&G as an A minus, Moody's is A3, and Standard & Poor's is A minus. And then this Comdex rating is sort of a composite where if they have 2 or more ratings, it ranks where do they stack up in the industry, with 100 being the best rating. And this shows essentially what percentile are they. So F&G, they're in the top 71% as far as their composite rating relative to other insurance companies. And so as we get into this, we can take a look at what index options are available within this annuity. And so under this accounts tab, this will show all of the index options. Now, you have the ability where you can allocate among multiple index strategies within the annuity. So like I said, you don't have to put all your eggs in one basket. And what we're looking at here, each of these index options will have a no fee structure, such as this one, this Morgan Stanley US Equity Allocator. But that same index also has an optional fee, which we call a performance enhancement rider. And essentially what this is doing, so this is a 1-year strategy point to point with a participation rate. So that means they will measure what is the performance of this index over the 1-year period. And if it's positive, this participation rate would be credited as interest to the account. So in this example with no fees, it's 80% participation in that positive index change, versus with the performance enhancement fee, it's 110%. So the fee would be for someone that says, I think that this could be a good year for the markets, and I'd like to wager 1.25% in order to get some higher upside potential. And so each of these will have an option with a fee and without. And you can see as far as the differences between that. And you have the ability each year on these 1-year strategies where you can change your allocation. So if you decided to choose an index with a fee 1 year, it does not mean that you have to go with an index with a fee for that following year. So you have the flexibility to adjust. And over on the right-hand side, what this number is showing me is that based on these rates, what is the back-tested average annual return over the last 10-year period? And so one thing to note is that especially after 2008, 2009, there really was a lot of innovation on risk-controlled index options in the marketplace. And with advancements in computer technology over most recent years, there's been a lot of these index options that have come into the marketplace. So if an index is recently created, what the financial institution like a Morgan Stanley, what they'll do is based on the components within that index and the rules of how it operates, they will project what it has done or what it would have done over the last 10-year period. So the main takeaway as far as what I'm saying here is that some of these numbers could be hypothetical in nature. And so another step that we take is we look up how long has the index been operating and what has the live performance looked like since it started. And so in a little while here, we can pull up the live performance for these index options to see what's the longevity on them and how have they done since they've been live. But as far as the index options available within this annuity, So there's a Morgan Stanley US Equity Allocator. This is an index that it has a large cap US equity index as well as a US technology index. And then it also has a fixed component. So if the equities are too volatile, there's a lot of movement in the index relative to the average, the index will actually shift some of that position into a fixed component in order to smooth out some of that volatility and protect the asset. There's also multiple S&P 500 strategies that are available. I'm going to, when we talk through these, look at the ones that are the no fee structures. And so one of them for the S&P 500 is a monthly sum with a cap, which essentially this one will measure any positive performance each month up to this cap of 2.55%. And then any months that have negative performance, it's going to include that and give a sum at the end of the year of what that 12 months, what that total sum is. And that's how they will, if it's positive, they'll credit that interest. If it's negative, then zero would be credited for that year. And so based on that strategy over the last 10-year period, that would have done 6.34% a year. And so the S&P 500, that has been around since 1957. So this is based off of live S&P 500 performance. There's also an annual point-to-point with a cap of 8.25%, where any performance from 0 to 8.25%, they will credit interest to the account. So if the index is up 5%, they would credit 5. If it's up 10%, they would credit a max of this 8.25. And so over the last 10 years, that would have done 5.71%. There's also a Goldman Sachs Global Factor Index. And so this index has equities from the US, Canada, Europe, and Japan, as well as a 10-year treasuries index. And we can see this particular one is 185% participation in the upside of that index. And the back-tested average is 5.33. Now, one thing to note is that these rates, as far as what the cap is or what the participation is on the index, F&G reserves the right where if they had to, they can adjust those rates. And the reason they do that, you have an initial surrender period that could be 7 or 10 years where your ability to cancel is restricted. But after that point, you're able to continue with the annuity and continue to grow your money and have full 100% penalty-free access to it. So F&G doesn't necessarily know how long you'll own this contract. It could be 20 years, it could be 30 years. And so they'll strive to keep these rates consistent during the surrender period. They do have the ability where they could adjust if they needed to, but really where they're putting that protection in play is if you were to hold this contract for a very long time, and let's say interest rates were brought down very low for a long period of time, at some point they may have to adjust these rates down. And so there's on this particular index, they do have a minimum rate though that they're stating where the participation on this for the no fee option would never be less than 100%. And so they, on that particular index, they have that rate guarantee in there. They also have a couple more S&P 500 related strategies. This one is a monthly average with a cap where they'll take the 12-month average price of the S&P 500 and compare that to the starting price at the beginning of the year. And any positive change in the beginning price versus the average, they will credit interest up to an 8.5% cap or ceiling. And then lastly, as far as the S&P 500 indexes, there's also a performance trigger, which essentially if the S&P 500 is positive at all, they will credit a flat 5.75% interest to the account. And so that means it could be up 1%, it could be up 20%. If it's positive, they'll credit this fixed trigger rate to the account. And then there's also some 2-year index strategies. We already talked about the Morgan Stanley the US Equity Allocator and the Goldman Sachs Global Factor. One additional index that's offered is this Barclays Trailblazer Sectors 5 index, which has 11 different US large cap ETFs, as well as a treasuries ETF and a investment grade bond ETF. And so this one is also volatility controlled, where if the markets have a lot of movement relative to the average, they'll shift heavier into that fixed component or even cash to smooth out some of that volatility. And last but not least, out of all of the strategies, there's also a fixed account. So if instead of having your growth tied to the performance of the different index strategies, if you prefer a guaranteed interest rate, even if it's just for a 1-year period, the current fixed rate is 3.75%. And that gets declared each year. And they guarantee that if it starts to come down, it would be no less than 1.75%. So these are all of the different index options that are available. And now I mentioned that we also like to take a look at what is the live performance of these indexes. And keep in mind, when I pull up the live performance, this will be the raw index data. So it's not going to include any participation rates or caps factored in. And on the S&P 500, we can see that there's multiple crediting options, but it's just one underlying index. So when we pull up the raw data, I'll just pull up the S&P 500 and just know that within this particular annuity, there's a few different strategies as far as how you'd be able to earn interest from the S&P 500. All right, so I'm going to stop sharing this screen and we'll pull up the live index performance. All right, can you see that, Zach?
Yeah, perfect. Thank you.
Yes. So this is showing those 4 main indices that are used within that annuity. And this is the raw index performance. And so, as I mentioned, this does not include participation rates or caps or any of those specific parameters as far as how the interest would be credited. Also, within a fixed indexed annuity, your principal is protected. So any years that you see negative performance through this raw index data, within the annuity, if the index is negative during the year, you just would get 0 interest credits for that year. You don't have any risk of loss. And so what we're looking at here is the raw index performance for the S&P 500, Goldman Sachs Global Factor, the Morgan Stanley US Equity Allocator, and the Barclays Trailblazer Sectors 5. And this is showing the year-to-date performance. This is showing the 1-year performance, 3-year average, 5-year, 10-year, 2023, 2024, and since inception. And when we look through this now, we can see a date on the since inception as far as when these indices went live. So S&P 500, that's been live since 1957. So as far as those back-tested returns that we were seeing and what we're seeing here on the screen, this is live data. It's been around for over 10 years. On the Goldman Sachs Global Factor, that has been around since May of 2021. And so a little over 4 years that this has been live. So essentially this 10-year performance on that is hypothetical. At least 5 years plus of that, 5-6 years is hypothetical because it hadn't been around for an entire 10-year period. The Morgan Stanley US Equity Allocator, so that's been live since November of 2023. And again, anything on here that extends beyond that would be hypothetical back tested. And the Barclays Trailblazer since 2015. So that one has been around for just about 10 years. And so when we look at this, we can see now some of these index options that have a mix between equities and bonds, there's been higher than normal volatility in the marketplace recently. And also the fixed market hasn't really done as well. So some of these have underperformed some over the last couple of years. But we can see that each of these index options year to date are positive. But if we look over the 1 year period, we can see that the Goldman Sachs Global Factor that has had positive performance in there. Morgan Stanley has been pretty modest, and the Barclays Trailblazer was negative. And if we look at this from a since inception standpoint, we can see out of these that S&P 500 that has been very consistent, and that's been a solid performer. It's probably the most well-known index for US large cap companies. Goldman Sachs Global Factor, that has actually been negative since inception. The Morgan Stanley US Equity Allocator, that has had pretty fair performance at 6.60%. And we can see as far as the Barclays Trailblazer Sectors 5, it's had modest performance for almost 10 years, 1.69% on average. So, typically when we look at these, we want to see that they have at least 2 to 3 plus solid index options that have not only strong back tested performance, but also live performance over a recent period and since inception. And so based on that criteria, this particular annuity really has 2 different index options that meet that, which would be the S&P 500 and the Morgan Stanley US Equity Allocator. So you may be a little bit limited. Typically, we like to see a few more strong index options just so that you have some flexibility as time goes on, where you maybe could change your allocation to adapt to changes in the marketplace. And so with this one, you are a little bit limited as far as the index options.
Yeah, great point. Great point.
Any thoughts, Zach?
No, I think this brings some transparency to the index options available. Obviously, many, I can't remember how many, but multiple S&P allocations that can be chosen from. But overall, no, I think you summed that up well. Thank you.
All right, so let me stop sharing here.
Yeah. So in summary, just going back to really how we started this and looking at this product, the F&G Accumulator Plus, and looking at this, just knowing this annuity can provide a few things. Matt had gone over the index performance, what it's done in the past, and what we can expect from the index options we can choose from. But in addition, a few other features to consider is also the access for unexpected health costs at no surrender charge or market value adjustment. It is also RMD friendly. So in looking at that, if we have to take out more to satisfy the RMD, there's no penalty that comes with that. And lastly, it is a flexible premium. So that might be another value add you're considering in your search for a fixed index annuity. Flexible premium, meaning that we can add additional funds throughout the life of the policy. But I think that about summarizes this one for us. So that'll conclude our breakdown of the F&G Accumulator Plus annuity. If you are looking for a better way to explore annuities, one built around transparency, education, and helping you make a confident, informed choice, we'd be happy to assist. So whether you'd like to speak with one of our annuity specialists or connect directly with Matt or myself, you'll find a scheduling link in the show description below. You can also request a personalized annuity report tailored for your specific goals. So whether you're focused on protection, guaranteed income, or balance of both, just follow the link in the description to get started.
Yeah, and thanks again for tuning in. If you found this helpful, please like and subscribe. And if there's a specific annuity product that you'd like us to review, please leave a comment, let us know. And until next time, we're the Annuity Researchers.
See ya.